Faang stocks have been bitten by a sell-off, and it's dragged the tech-heavy Nasdaq into a bear market. That means the stocks have fallen at least 20% from their recent highs. For Facebook, Apple, Amazon, Netflix, and Alphabet, the sell-off has wiped a combined $1 trillion off of their market capitalization.
In September, the market was at an all-time high. So yes, it's been a fast and furious sell-off. We had a hard October, November. There was a little blip in November where people were bargain hunting. There was some buy side coming into the market.
The mid-year rally saw Apple and Amazon shares hit record highs. But optimism turned sour after analysts were disappointed by Amazon's growth projection for its businesses in 2019, while Apple's iPhone sales showed signs of declining. Facebook was plagued by scandals over its handling of users' private data, and Netflix continued to spend beyond its means, sending it deeper into debt. Google parent Alphabet's results disappointed investors and prompted concerns over slow, unpredictable growth due in part to rising scrutiny from regulators. The so-called Red October market rout prompted a steep drop in the return on investment for Faang stocks. But some analysts say investors should focus more on overall economic growth expectations.
We think that equity markets have overreacted, that the broader macroeconomy, especially in the United States, while it should slow down next year, is still going to keep growing at a pretty healthy pace, about trend.
Some investors say the market sell-off is just a correction, while others are expecting it to drag on longer. With no clear direction, it seems volatility is likely to continue well into 2019. Laila Humairah, TRT World.
Let's get more now from Bob O Donnell from Foster City, California. He's the President and Chief Analyst at TECHnalysis Resarch. Welcome to the program. 2018 really was the year that the tech sector would rather forget. We heard there the so-called Faang stocks lost a combined total of around $1 trillion in market cap this year. Why did they have such a rough time this year?
Well, I think the problem, Oscar, was we saw valuations that just got crazy. I mean, people were putting so much faith in this tech industry that seemed to have no downsides to it whatsoever that they felt it could keep going and going. And realistically, you have to know that those kind of numbers can't sustain themselves. And so that's what we saw. Is we saw the market start to realize that these growth numbers can't keep going forever. Smartphone sales start to peak. Facebook runs into all kinds of issues from a political perspective and a social perspective and perhaps a regulatory perspective. So you saw all kinds of interesting issues come up, and they all sort of hit at once, unfortunately. And it was all a confidence game, and that confidence game fell apart. That's why we saw all these stocks get hit badly.
So if this plunge in values was a correction, as you say, is the correction over, or will it continue into the new year, do you think?
Well, look, I think we have to look at each of these companies separately. I think overall, I'd argue that the correction has probably been completed. There's still fundamentally a lot of value in these organizations, but there are some differences. Well, I mean, again, Facebook has this enormous installed base, extraordinarily difficult to grow that. And oh, by the way, now a lot of people, certainly here in the US at least, starting to pull back away from Facebook. And I'm concerned that will impact them pretty severely, especially if there is some regulation involved this year. In the U.S., as there has been with GDPR in Europe. Apple, I think, has got a strong, solid base. They're moving to a services model, but services don't have the same profit margins that we see from the other businesses, like the iPhone that started to stall. Netflix is interesting, but the thing with Netflix is it's a bit of a one-hit wonder. I mean, it's only an entertainment service. All the other companies, for the most part, are sort of mini conglomerates. They each have multiple businesses and can pull different levers when times are down in one particular business. Even Facebook has Instagram and WhatsApp, several different places they can go. Amazon has got a lot of the growth in the cloud that's an opportunity, as does Google. So, I think I think cloud-based computing is important, and that looks good for Google/Alphabet, as well as for Amazon. And of course, that's part of the reason why Microsoft, which is not part of the Fangs, but is now the most valuable company in the world, capitalization perspective, is sitting at the top because of the influence that they've had and the growth they've had in that cloud computing market.
Interesting. Okay, we will keep a close watch on the tech sector into the new year. Bob O'Donnell, Chief Analyst at TECHnalysis Research, thank you again for your time.